Hello everyone, and welcome to the Adviseable Advantage Property News Update. Following the lifting of bans on public auctions and open home inspections, the number of properties listed for sale has definitely been rising. According to CoreLogic, buyers in the market are matching the new level of listings. Sydney's property market has seen the biggest jump in new listings, with domain.com.au data showing a 32% increase in new listings over the weeks to the end of May compared to the previous 4 weeks. Perth, surprisingly, saw a 30% rise, followed by Melbourne and Brisbane, which both saw a 15% increase, and Adelaide with a 6% increase in new listings. We are coming off quite a low base, of course, and the numbers are still below what they were in February pre-COVID pandemic. But nevertheless, it is good news. The uplift in new listings was also seen across regional Australia. According to Hotspotting, Terry Ryder's published data, some examples are the St George region, which is up 128% over the last few weeks, South WA, which is up 79%, the Mornington Peninsula, which is up 55%, Cairns up 51%, Redland City up 49%, and Mandurah up 43%. The global financial services firm UBS, which previously forecast a price collapse, has upgraded its outlook for the housing market. Reports of a stronger than expected job market and only modest house price declines during the coronavirus lockdown suggest that property values won't fall as much as they had previously thought. UBS now expects a smaller price decline of between 5 and 10% this year. Real Estate Institute of Australia President Adrian Kelly has said that previous forecasts of 30% price drops were in fact highly questionable anyway. CoreLogic, ANZ and AMP Capital are in unison with their forecasts of a peak to trough decline of less than 10%. UBS says that the early signs of a trough in the labour market and consumption mean that the contraction in the GDP is less than initially forecast. This revision is more about the economy than the stimulus, of course. In other news, Melbourne markets have held up better than most against the forces of COVID-19. In his recent publication, Terry Ryder from Hotspotting reports that Melbourne has done particularly well with price performance, with houses coming back strongly in the most recent quarter and apartments doing better than houses in annual terms. The number of growth markets has dropped but remains at solid levels, and prices have continued to perform well. Hotspotting's new Winter 2020 survey has identified 32 growth suburbs, higher than most previous surveys since the last peak in early 2017. In the circumstances, a result of 32 suburbs with growing sales activity is a solid performance and is better than all the quarterly surveys of 2018 and 19, when the Melbourne market was having its post-boom correction. According to a survey by the Property Investment Professionals of Australia, PIPA, and the Property Investors Council of Australia, PICA, 7 out of 10 property investors say it's a good time to buy residential property, with the majority also believing it is business as usual. The results, which examined the market's short-term prospects, are down only slightly from an investor sentiment survey which was conducted in September last year. PIPA chairman Peter Kalitsos said that the surveys show investors were overwhelmingly optimistic. Nearly 60% of respondents indicated that the pandemic had not made them change their investment plans over the next 6 months, with a further 18% saying the crisis had actually made it more likely that they would purchase a property over that time frame. He says that the survey results also showed about 30% of investors were more likely to buy a property in the next 6 to 12 months because of the pandemic. Kalitsos says most investors have the financial buffers to see them through the current economic uncertainty. Real estate sources report that there has been a surge in inquiries for suburban and regional properties as buyers turn their attention away from inner city apartments to detached houses with multiple living spaces and backyards. With technology allowing more people to work from home during the coronavirus pandemic, there is no longer a need for professionals to live in the city, where the cost of housing is so much higher than in the suburbs or a regional area. In news from the banking and finance world, we see that property investors who may be planning to borrow funds should note that the bank's restrictive lending policies, which were established in response to COVID-19, are unlikely to ease anytime soon. It will continue to be challenging for investors who want to borrow up to their maximum capacity, or are perhaps relying on bonuses or commissions, or want to purchase property in high-density postcodes that the banks consider risky. But then think about it. If the bank considers it risky, why would you buy there? Lenders are concerned about high-density postcodes where there has been a lot of development. In some cases, lenders are not approving loans for properties in these sorts of areas, or will only go up to 80%. Now, at Adviseable, we have always said that a good area and suburb research is important. But investors looking to purchase in the next few months, say, will need to do their research even more carefully, with some banks requiring lower loan-to-value ratios and also scrutinising living expenses even more heavily than before. The banks haven't relaxed those policies. Some banks were previously including 100% of bonuses and commissions when assessing a borrower's serviceability, but many clients have seen a real pullback on that. Different banks have also been really restrictive with loan-to-value ratios and certain postcodes. Some lenders have also stated that they won't be taking on casual employees anymore. We have heard that some lenders are allowing those receiving JobKeeper payments to borrow and some are not. So in view of all this, it's really important that you check with your mortgage broker what your options are. Please do contact us if you need a great, experienced mortgage broker who can help you navigate these very, very challenging times. And finally today, a word to any landlord who has been affected by a tenant struggling through the COVID-19 pandemic, and also the importance of working with your property manager to find a way through this. It's important, of course, that your property manager looks after your tenants as well as you, the landlord. We generally find that if landlords have done the right thing by the tenant, then they will be less impacted by rent reductions. So if you can accommodate your tenant's need, within reason of course, then your tenant is likely to become more aware and considerate of you as a landlord. So a bit of a give and take kind of situation. Now, we say the same thing about maintenance. So if you maintain your property well and respond to your tenant's maintenance reports, then they are more likely to treat your property respectfully and pay their rent on time. And let's not forget, you want them to report issues to you. It's better to have those reports in than find out that the bathroom is leaking, for example, 6 months down the track and the tenant couldn't be bothered to let you know. Again, you're going to read dramatic headlines at the moment about rent arrears. But again, at Adviseable, we have found that the vast majority of tenants are continuing to pay their rent and can afford to do so, sometimes with both JobKeeper and JobSeeker providing support. So property managers should be having open conversations with tenants who try to claim a rent reduction, with the government packages making rent more affordable. Property managers are talking to the tenant if they are coming to them and saying that they are under financial hardship, and they are guiding them to make sure that they speak to their employer about JobKeeper, or they speak to Centrelink about the JobSeeker allowance, because based on those numbers, they should be able to pay their rent. Please subscribe to our channel so that you don't miss out on area reports, on free webinars and further news updates. Leave us a comment below. Let us know if you've got any questions or concerns about anything to do with your property buying. Please check our website for details on our services and how our advisors and buyer's agents can help you. And I will see you soon. Bye.